Imagine waking up every month to find your bank account growing, not just from your salary but from steady share market income. Sounds too good to be true? Well, it's not. In this video, I'll reveal 6 proven strategies to help you generate consistent income from the stock market, deposited straight into your bank account. Whether you're a beginner or an experienced investor, these strategies are designed to work for you. So, let's dive in. Dividend investing. Let's start with dividend investing, one of the safest and most reliable ways to earn steady income. Dividend-paying companies share a portion of their profits with shareholders, usually on a quarterly basis. To get started, look for companies with a strong history of paying dividends, high dividend yields, and a low payout ratio, which means they're likely to sustain their dividends. Examples include blue-chip stocks like Coca-Cola or Johnson & Johnson. Over time, reinvesting these dividends can significantly grow your wealth, and when you're ready, you can start withdrawing them as income. But how do you pick the right dividend stocks? Focus on companies with strong fundamentals, such as consistent revenue growth, low debt, and a competitive advantage in their industry. Diversify across sectors to reduce risk. For example, combine dividend-paying tech stocks with utilities or consumer staples. This way, even if one sector underperforms, your overall income remains stable. Covered call options. Next, let's talk about covered call options, a slightly more advanced but highly effective strategy. If you already own stocks, you can sell call options on them to earn premium income. Here's how it works. You agree to sell your shares at a specific price, the strike price, within a set time frame. In return, you receive a premium upfront. If the stock doesn't reach the strike price, you keep the premium and your shares. This strategy works best in stable or slightly bullish markets and can generate monthly income with minimal risk. For example, if you own 100 shares of a stock trading at 50, you could sell a call option with a strike pre-CEO of 50. You could sell a call option with a strike pre-CEO of 55. If the stock stays below 55, you keep the premium and your shares. If it recedes above 55, you keep the premium and your shares. If it recedes above 55, your shares are sold at 55s, but you still keep the premium. This is a great way to generate extra cash while holding onto your investments. Just remember, this strategy requires some knowledge of options trading, so start small and learn as you go. REITs, real estate investment trusts. Third, consider investing in REITs or real estate investment trusts. REITs allow you to invest in real estate without the hassle of owning property. They generate income by renting, leasing, or selling properties and are required by law to distribute at least 90% of their taxable income to shareholders as dividends. This makes them a fantastic source of passive income. There are different types of REITs. Equity REITs, which own and manage properties. Mortgage REITs, which invest in mortgages, and hybrid REITs, which do both. Look for REITs with a diversified portfolio, strong management, and a history of consistent payouts. Examples include publicly traded REITs like Realty Income or Vanguard. Real estate ETF. REITs are particularly attractive because they often perform well during inflationary periods, making them a great addition to a diversified income portfolio. Index fund investing. Fourth, index fund investing is a simple yet powerful way to build wealth and generate income. Index funds like the S&P 500 track the performance of a specific market index and often pay dividends. By reinvesting these dividends, you can grow your portfolio over time. Once your portfolio reaches a significant size, you can start withdrawing a portion as income. Index funds are low cost, diversified, and ideal for long-term investors who want steady returns without the hassle of picking individual stocks. For example, investing in an S&P 500 index fund gives you exposure to 500 of the largest U.S. companies. Over time, the compounding effect of reinvested dividends can significantly boost your returns. When you're ready to start withdrawing, you can set up a systematic withdrawal plan to bond laddering. Fifth, let's explore bond laddering, a low-risk strategy for generating regular income. Bonds are essentially loans you give to governments or corporations, and in return, they pay you interest. With bond laddering, you invest in bonds with different maturity dates. For example, you might buy bonds that mature in 1, 3, 5, and 10 years. As each bond matures, you reinvest the principal into a new long-term bond. This ensures a steady stream of interest payments while reducing the risk of interest rate fluctuations. For instance, if interest rates rise, you can reinvest the proceeds from maturing bonds at higher rates. If rates fall, you still have bonds locked in at higher rates. Bond laddering is particularly useful for retirees or conservative investors looking for predictable income with minimal risk. Systematic withdrawal plans. Finally, if you've built a sizable investment portfolio, Consider setting up a systematic withdrawal plan. This allows you to withdraw a fixed amount regularly, say monthly or quarterly, while keeping the rest of your investments intact. This strategy works well with a diversified portfolio of stocks, bonds, and mutual funds. The key is to withdraw only a small percentage, typically 3 to 4%, to ensure your portfolio continues to grow over time. For example, if you have a 500,000 portfolio, withdrawing 4,500 portfolio, withdrawing 420,000 per year, or about $1,667 per month. Combine this with dividend income, and you've got a steady stream of cash flow. Just remember to adjust your withdrawals based on market conditions to avoid depleting your portfolio during downturns. These 6 strategies, dividend investing, covered call options, REITs, index fund investing, bond laddering, and systematic withdrawal plans, are proven to help you generate steady share market income deposited directly into your bank account. Start with one or combine them for even better results. Remember, consistency and patience are key in the stock market. With the right approach, you can build a reliable income stream that grows over time. If you found these tips helpful, don't forget to hit the like button and subscribe to our channel for more wealth-building strategies. Share this video with anyone looking to grow their income through the stock market. Thanks for watching, and I'll see you in the next video.